Well, it's interesting because over the past 2.5 years, according to the official numbers, and we all know those official numbers are vastly understated, but the central banks of the world have purchased 1,250 metric tons of gold, which is worth about $80 billion. But think about this. In other words, if the central banks were to purchase, let's say, 5% gold right now in U.S. dollars, just converting 5% would be another 300 to 400 billion in purchases. Now, an $80 billion infusion pushed gold up to its all-time high. What I'm trying to say to you is this. You add that kind of money, you're talking gold that could easily be up above $10,000 because 80 billion pushed it up here to 2,600 and change with virtually no U.S. participation. And according to the World Gold Council, historically, every time we see a Fed cut, gold has rallied as much as 10% in the 6 months after the first Fed cut. Yeah, I think we could see much higher prices over the next 6 to 12 months, especially as we are now banking another 50 basis point rate cut. At least that's what the smart money thinks will happen. And I think you can look at some of the traders at Goldman Sachs and at UBS who might echo that same sentiment. All of these banks are systemically tied together. Why did Credit Suisse have to get bought out by UBS? And this is the bank that has to be bleeding massively from their large short position in both gold and silver. Whether it's Bank of America or another major bank, I think the systemic nature of the banking system, and in particular the large commercial banks, is real. And so here we are again, lowering rates and perhaps setting up these institutions to load up on treasuries, only ultimately to see rates go the other way, because at some point you have to fairly compensate people for taking on all of this risk that the central banks are illuminating here, the default risk, the systemic risk, the inflation risk, and the de-dollarization risk. Well, I'm going to read UBS first because it's not as grandiose as Goldman. They're close. But UBS says gold has risen by 29% this year, consistently breaking records on the way up. By the end of the third quarter in 2025, $3,000 gold. By the end of the year in 2025, $3,080. And Goldman Sachs has said that they're being inundated with precious metals requests on their trading desks, which is a very, very, very big deal, obviously. Ultimately, if you just put all of these things together and realize that the commercial banks and the central banks, who are the most collectively well-informed and well-financed traders in the world, are telling you where this is going, I don't know. To me, it's a massive contrarian indicator, and I would say that's probably selling it short from where it ultimately goes.